We'll begin with intangible assets. We'll begin with intangible assets. Intangible assets do not have a physical substance. They will have a future economic benefits. They will have which one? Future economic benefits. Okay, only cost. Only cost can be recognized. Only cost can be recognized. What is cost? It can be cost of development, it can be cost of improvement, or it can be cost of purchase. Cost of purchase. Research and development, the research cost cannot be capitalized. Only what? Development cost can be capitalized. Only development cost can be capitalized. Research phase cannot be capitalized. In case of purchased assets, the purchase cost can be capitalized. Okay, in case of self-generated assets without a cost like goodwill, it cannot be recognized. It cannot be recognized. Okay, and good. This all these intangible assets are amortized based on estimated useful life. Based on estimated useful life. Okay, sir. If the estimated useful life is limited, if the estimated useful life is limited, simple cost of the asset divided by estimated life. Estimated life. If it is unlimited life, there is infinite life. That means you have to apply the test of impairment. Test of impairment. What is test of impairment? Compare the cash flow undiscounted with which one? Carrying amount. With carrying amount. Undiscounted cash flow with carrying amount comparison. Okay. If you find undiscounted cash flow is more, undiscounted without taking present value, is more than carrying amount, no impairment. There is no impairment. Then, when impairment arises, when undiscounted cash flow is less than the carrying amount. Economic benefits are less than the carrying amount. Okay. If impairment arises, then go to step B. What is step B? Impairment loss. Impairment loss will be equal to carrying amount minus recoverable amount. So what is this recoverable amount? Present value of cash flow. Okay. So there are two steps you have to do for infinite life intangibles. What are the two steps? Compare the undiscounted cash flow with which one? Carrying amount. If it is more, then there is no impairment. Impairment arises if the undiscounted cash flow is what? Less than the carrying amount. Then what is impairment loss? Carrying amount minus what? Recoverable amount. What is carrying amount? Book value. What do you mean by recoverable amount? Present value of cash flow. Present value of cash flow. It can be net selling price also. It can be which one? Net selling price or present value of cash flow, whichever is higher, we will take. Sorry? Normally, we'll always compare carrying amount, book value than compare. Fair value இங்க தான் எடுத்துப்போம். Recoverable amount is present value of cash flow or fair value, whichever is higher. Whichever is higher. So let us come back to the questions. Look at this. Research and development estimate costs to be identified கொடுத்திருக்காங்க. Okay. What to do? How to deal with R&D cost? How to deal with which one? R&D cost. What is the correct answer? must be expensed in the period when it is incurred unless the equipment has what alternative other R&D project has. Right. Which of the following statement is correct about which one? Which of the following statement is correct about reconciliation of US GAAP with which one? IFRS. As per IFRS, the cost of development will be capitalized, but as per US GAAP, it will be what? Expensed. Read the next question. He purchased a recipe for how much? 75,000. Additional 10,000 was spent in securing what? Secret recipe கொடுத்திருக்காங்க. They expecting to keep the recipe for indefinitely. But the industry has found that recipes have been used for an average of how much? 8 years கொடுத்திருக்காங்க. What is the thing? Which is the correct answer? It is a limited life intangible or unlimited life intangible? Unlimited கிடையாது. இங்க கொடுத்துருக்காங்க. Because of the taste changes, industry has found that recipes have been used for how many years? 8 years னு கொடுத்துருக்காங்க. So, amortized based on what? 8 years. Estimated useful life. How much of consideration you paid? 6 million. 54,96,000. 54,96,000. First September we acquired. For 60 lakhs. That day the fair value is how much? On 31st December, the fair value of the company was estimated at, including goodwill, was determined at 58 lakhs கொடுத்திருக்காங்க. The company's carrying value of the planned date, including goodwill, is how much? The amount of goodwill to be written off on 31st December should be simple. What is the goodwill? Initial goodwill how much? 60 lakhs minus 54 lakh 96,000. What is initial goodwill? 60 lakhs minus 54 lakh 96,000. What is the goodwill? 5 lakh 4,000. This is a goodwill. Now, what is the value of net assets including goodwill? 59 lakh கொடுத்திருக்காங்க. 59 lakh கொடுத்திருக்காங்க. 60 lakhs we paid. Value of net assets including goodwill. Including எவ்வளவு கொடுத்திருக்காங்க? 59 lakhs now. What is the reduction in value? Reduction is 1 lakh. This 1 lakh will be adjusted towards goodwill. This 1 lakh will be adjusted towards which one? Goodwill. 1 lakh will be adjusted towards goodwill. Number 5. Correct statement regarding R&D cost. US GAAP requires R&D to be expensed. IFRS requires research cost to be expensed, but allow capitalization of development cost. Correct. Sixth part. Same kind of question. Answer is C. IFRS allows capitalization if technical feasibility has been established. All the following statements are identifiable intangible assets, except leave this. Eighth question. Withholding only concept prevents the company from recognizing value of patent as a non-current asset. We develop a new product that has been just patented. The development cost is negligible, so which means there is no cost. Without cost, you cannot record the asset. Without cost, you cannot record the asset in the balance sheet. Provide for all losses, but don't record anticipated income. Conservatism is nothing but provide for all losses, but don't record what? Anticipated income. See, asset is not having a cost, you cannot record it. You cannot record it. Look at the next one. March year 3, in December of year 2, non-cancelable agreement with the lender to refinance the debt, same interest rate, year 5 கொடுத்திருக்கா. How it will be classified in the case. We are in which year? Okay, it is due in March year 3. We are in what? Year 2. The amount is payable in year 3. The amount is payable in year 3. It should have been current liability. But we had an agreement that it will be given only in what? Year 5. So when we have to repay? Year 5. So it will be taken as which one? Long-term liability. It will be taken as which one? Long-term liability. Bonds retired through annual installments of 1 lakh per year for what? Next 10 years கொடுத்திருக்காங்க. 3 lakh mortgage loan due in 5 years கொடுத்திருக்காங்க. 2 lakh loan due in what? 6 months. They ask you what is the total long-term liability கேட்டிருக்காங்க. What is the total long-term liability ன்னு கேட்டிருக்காங்க. ரொம்ப simple. 10 million 1 million we have to repay each year. So out of 10 million, 1 million we have to pay in the next year, which means that is a current liability. In the 10 million, how much will become non-current liability? 9 million will become what? Non-current liability. This is a non-current liability. Payable in 6 months is a current liability. So what is a non-current liability? 10, 9 plus. But the company has a financing agreement. It will extend for what? Another 2 years. So we are not going to pay it in 6 months. We are not going to pay it in 6 months. We are going to extend it for further 2 years. Now, this can also be taken as what? long term. So this 3 million, this 2 million, and what? 9 million. 9 plus 3 plus 2, how much million? 14 million. 14 million. Read the next one. There is a short-term obligation. Okay. We classify it as which one? Long-term classification, because we are going to refinance with long-term debt. We have taken a short-term loan. We are going to refinance with which one? Long-term. Or we will be able to demonstrate ability to refinance as which one? Long-term. The company can demonstrate the liability to refinance the long-term debt. How will you prove that you are going to have a classification of short-term debt into long-term debt? Either by completing a refinance transaction, entering into an agreement, but that can show the ability to perform before the financial statements are issued. This is the correct answer directly. Sir, I'm having a short-term loan. When will I call it as long-term loan? I can refinance with a long-term loan. How will I demonstrate it? I've entered into an agreement to convert the short-term loan into what? Long-term loan before the financial statements are what? Next part, number 12. For a company to reclassify short-term obligation as a long-term obligation on the balance sheet date, which of the following should be met? We want to convert short-term into long-term. Which of the obligations should be met? Same question. B. A company has 5 lakh short-term liabilities. Okay. Before the financial statements are available to be issued, it refinances debt with long-term loan. How the company will classify these liabilities? How this liability will be classified? ரொம்ப simple. 3 lakh will be which one? Non-current liability. Remaining 2 lakh will be which one? Current liability. What is a subsequent event? What is a subsequent event? What do you mean by event? It can be loss of stock, bad debts, bankruptcy, etc. and all. Simple. Any event that is taking place after the financial statement, but before what? It is reported to the shareholders. Before it is reported to the shareholders. Actual sales is 26 lakhs 95,000. Total warranty costs are expected to be how much? 3% of sales. Actual warranty expenses are 31,500 and labor 9,100. The amount of warranty expense that should be appearing in balance sheet. How much? Oh, 80,850. 3% on sales will be recognized as expense. Expense on a category. Just put 3% of sales on the expense. 80,850. Warranty expenses will be charged against provisions created. Warranty expense will be charged against what? Provision created. What is the expense? The provision created. Read question number 16. We are manufacturing serious systems that carry 2-year assurance type warranty. 4% of sales. Sales is 3 lakhs. Okay. 67,500. Expense of 3 million into 4%. What doesn't matter? Actual expenses doesn't matter. Read the next question. So 9 lakh into 4%, how much you are getting? Replacement cost will be charged against the expense. 3 lakh 60,000. 3 lakh 60,000. 18th question. What should be the balance of warranty liability? Work out பண்ணுங்க. Four percent of units will be defective now. What will be the liability? 80,000 into how much? No, 4%. 80,000 into 4% into 95. 80,000 into wait பண்ணுங்க. Balance liability 80,000 into 4% of the units will become defective னு சொல்றான். அதுல 95 spend பண்ணணும். எவ்வளவு வரும்? 3,04,000. ஆல்ரெடி நம்ம எவ்வளவு ஸ்பெண்ட் பண்ணிட்டோம்? 1,59,000 we spent. What is the answer? 1,45,000. 1,45,000 is the amount to be carried forward. Amount to be carried forward. Check. 1,45,000 is correct. Next. A company is subject to assurance type warranty claims. It is estimated between 1 million and what? 3 million will probably be paid out on கொடுத்திருக்காங்க. No estimate of loss in the range has been estimated by any other amount கொடுத்திருக்காங்க. What should you do? What should you do? Assurance type warranty கொடுத்திருக்கோம். What is the estimate? 1 million to 3 million will be probably paid out னு சொல்றான். No estimate of loss within the range, better estimate than what? Any other amount கொடுத்திருக்காங்க. So what you should do? Simple. Ensure to provide for a loss for the minimum amount. எவ்வளவு loss? Approve a loss of how much? 1 million. Ensure to provide for a loss for a minimum amount. Question number 20 பாருங்க. Deferனா அடுத்த வருஷம் பார்த்துக்கலாம். Question number 20 பாருங்க. %4 of sales. 3,85,000 into 4%. That's it. They ask you only warranty expense. It's repeated 154. Next, number 21. $10,000. Expected cost is 250. Expense for the second year. Expense for the second year. The selling price. Company sold 80 units in the first year, 100 units in the second year. Warranty cost, okay, warranty cost 750 கொடுத்திருக்காங்க. They asked you to find out what is the expense for the second year. 10,000 the selling price. Sorry, 10,000 the selling price. Type it. Will not be 25,000. It's correct. 85,000. What is the answer? What is the answer? 80 into
750. 100.
85,000.
Warranty
Actual expenses in that. First year la sale பண்ண product, second year la warranty provision எவ்வளவு இருக்கு? Second year la sale பண்ண product, that is the first year warranty 250. Look at 22. Units were sold for 6,000 per unit. Warranty cost is how much? 150 சொல்றாங்க. Warranty cost is 150 per unit.
Future warranty.
That's what. Next 1 year of warranty. We have to create a provision for this. So we need to create a provision 250 into 150. 250 into 150 put an hour. 37,500 is the expense. Journal entry will be warranty expense upon data to warranty liability account. Warranty expense upon data to provision for warranty liability will be what? 37. Read the next. This is on accounting for income taxes. This is on which one? Accounting for income taxes. Temporary and permanent differences on taxable income and pre-tax financial income differs that. Deferred tax accounting, what can be reconciled? In deferred tax accounting, what can be reconciled? Only temporary differences will have what? DTA or DTL. We had seen time of claiming depreciation or time of claiming an expense different from which one? Accounting and financial record. Permanent differences are like exempted incomes, expenses not allowed, those things. So permanent differences cannot be reconciled, only temporary differences can be reconciled. We purchased an asset for how much? 1 lakh. The company uses what? SLM depreciation with an estimated life of what? 5 years and zero salvage value. And for tax, they are using what? MACRS. Deferred tax liability on 31st December 2000. When the machine was purchased? 1st January 2000. Wait, tax level. Okay. Accounting, we would have charged depreciation. Accounting, we would have charged depreciation based on life. 1 lakh divided by how many years? 5 years. 1 lakh divided by 5 years, 20,000. Tax, 1 lakh into percentage? 33.33%. So what would have been the difference? 33,330. So what is the difference? Any tax rate is given? 35% tax rate is given. Okay, what is the difference? 13,330 into what percentage? Into 35%. How much? 13,330 into 35%. How much? 4,667. Answer is D. I repeat, in accounting, you have claimed 20,000 depreciation. For tax, we are claiming how much? 33,330. Now, difference is what? Difference is, the 13,330 is the expense difference. Under tax rate will be 35%. It will be what? 4667. 4667. 4667 is the answer. Next part. Which one of the following statement describes assets liability method of accounting income tax? Asset liability method of income tax. Rate to be reported along கிடையாது. Deferred income tax is based on tax rate effects along கிடையாது. Deferred difference along கிடையாது. Deferred income tax based on deferred tax rates along கிடையாது. The tax effects of temporary differences are not reported separately, but are reported with which one? Specified assets and liability related to revenue and which one? Expenses. That is what we do, what? Asset minus liability method. What is income before income tax? 5 million on how much? 4 million கொடுத்திருக்காங்க last year and current year. Interest income not included in the above, which was not subject to income tax கொடுத்திருக்காங்க. Okay. Income before income tax of 2014 includes 80,000 from the sale of which one? Real estate property. Okay. They will receive full payment in 2 installment in 2005. They reported again in 2005 income tax return கொடுத்திருக்காங்க and paid tax for it கொடுத்திருக்காங்க. There is an effective tax rate of how much? 40% கொடுத்திருக்காங்க. The deferred tax asset or liability கேட்டிருக்காங்க. The deferred tax asset or liability கேட்டிருக்காங்க. Okay. Included a gain of 8,000 for which one? Sale of real estate property, for which they financed short term note கொடுத்திருக்காங்க. They received the full payment in which month? During 2005 கொடுத்திருக்காங்க. They reported again in 2005 for income tax return as an installment sale. Paid tax for it கொடுத்திருக்காங்க. There is no problem in this one. There is no problem in this one. The problem is with this one. Okay, where the income is reported? Accounting first, then tax next. Okay, so what is the tax effect for this? 80,000 into how much percentage? 80,000 into 40%, how much it will be? Because this is income, this is interest is not included in both. That is not subject to tax. It's a permanent difference. That is a permanent difference. Timing difference comes only in which one? Gain on sale of land. 80,000 into 40%, how much is 32,000. The purpose of intra-period income tax allocation is to read it. In deferred tax accounting, we recognize permanent difference or temporary difference. Temporary differences, timing differences we reconcile. Which one of the following temporary differences will result in deferred tax asset? When deferred tax asset will be created? Accounting profit is more than taxable profit. Accounting profit is more than taxable profit. Go through the thing which will result in accounting profit more than taxable profit. There's a mistake in our interpretation. When will he create DTA?
Next year.
When will he create DTA? Taxable profit is more than which profit? Accounting profit, or accounting profit is more than taxable profit?
Next year we are tax paying.
We pay more, which means
This year we pay more.
we paid more than what? We paid more than. So
Accounting tax is accounting income is more.
taxable profit is more than accounting profit. I have to pay, but I paid this much. What is deferred tax asset? When you pay in advance. When you pay in advance. When you pay in advance. For example, accounting tax comes to 5 lakhs. Accounting tax comes to how much? 5 lakhs. You paid 6 lakhs. You paid 6 lakhs, which means taxable profit should be more than accounting profit. Or you would say accounting profit is less than which profit? Taxable profit. No, sir. Sir, accounting profit is less. I want to pay only 5 lakh. I want to pay only 5 lakh. But actually I paid 6 lakhs. Taxable profit is more. In this situation as well, accounting profit is less. Otherwise, you can say taxable profit is more. Deal வந்து பாத்தீங்கன்னா கம்மியா depreciation போட்டிருப்போம். அப்ப accounting profit will be more. இல்ல tax depreciation அதிகமா சார்ஜ் பண்ணாலும் கம்மியா பே பண்ணிருப்பீங்க. Point number D results in accounting profit greater than taxable profit. Accounting we claimed lesser depreciation, tax we claimed what? More depreciation. This will cause what? DTL. Advance rental receipts reported in tax return as revenue, which means taxable profit will be greater than which profit? Accounting profit solla. Otherwise, accounting profit is less than taxable profit no solla. This is a situation in which we create which one? DTA. Okay. So taxable profit is greater than accounting profit, or you can say accounting profit is less than taxable profit. You create which one? DTA. Next. Tax rate other than current tax rate may be used for calculating deferred income tax when future tax rate has been enacted into law. There's a chance that in the future the tax rate will differ now or change now. Okay, so where we will using which one? Future tax laws. Accumulated difference between income tax expense and actual liability paid is called as what? Deferred taxes. US tax code reports the financial results in accordance with US GAAP. Which of the following requires recognition of deferred tax liability? When will you recognize deferred tax liability? Taxable profit is greater than which profit? Accounting profit is solla. Otherwise, accounting profit is less than taxable profit. You have to recognize it. Then the situation la varudha paru. What is the annual payment? 40,000. Okay. First payment is at the inception of lease கேட்டிருக்காங்க. Then incremental how many times you are going to see? 4 annual payments. 4 annual payment. First payment is received 40,000. Okay, lessors cannot be. What is the initial measurement of global lease liability கேட்டிருக்காங்க? Think பண்ணுங்க. There is a small concept that is given. Wait. When are we getting the payment? P0 day 1 itself, that is on 1st March itself, we are getting the payment. Then at the end of first year, then at the end of second year, then at the end of third year. How much you are getting? 40,000 we are getting today. What will be the present value for this? It will be 1 rupee. Today, whatever you are getting, it will be having a value of what? 1 rupee. The present value of cash flow will be, today we are getting this. On the date of signing, we are getting this 1 rupee worth. P1 we get 40,000, 4 installments. What will be the present value? How to work out the present value calculator? 1 divided by 1.08. 1 divided by 1.08 போடும். That divided by 1.08. This divided by 1.08 போட்டா present value of 1 rupee வரும். Multiply it, then add it. This is the present value of cash flow. I repeat, today we get 40,000. What is the value of that rupee? 40,000. This we get it in first year end, second year end, third year end. Total of 4 payments. Present value is 143,084. Nearest to 143,080. Don't worry, these present values will be given in the question. These present value will be given in the question. Be careful. This 40,000 is received on day 1. The first payment is due at the inception of lease. On 1st March 2024 itself, we collect the payment. We collect the payment amount. Next part. Initial payment 1,80,000. 4 annual payment of 1,80,000 beginning from 1st January 2015. There is a purchase option to 3,500 at the end of the lease term. Okay. Implicit rate is how much? 6%. They ask you to find out lease liability. They ask you to find out which one? Lease liability. Try pannu. Adhe pannu. Please remember, they ask you to find out lease asset or value, liability or value. With 18,000 pay pandrole, there is paid already. That is not part of liability. That is not a part of which one? Liability. So how many annual payments we have to make? Then option to buy. Okay. How much you have to pay? 18,000. Like that we have to pay for 4 years. Then we have to pay and buy how much? 3,500. Interest rate is like 1 divided by 1.06. This is a lease liability. 65,144. Initial payment we don't mind. Plus 4 installments. Let me correct that. 65,144. Initial payment will not be considered here. Why? Because we are asked to work out the value of asset or value of liability. Value of liability represents what? The unpaid amount or amount to be paid. So this is 65,144 is closer to what? This one. Let me check. Because of which one? Rounding of error, this different. We don't take absolute amounts. We don't often take adnala. There could be difference. They don't consider 18,000 because it is already paid. They ask you to work out which one. Suppose the lease value lease value this plus how much is paid? 18,000 we paid. We would have taken as 83,140. Which is not a criteria for classifying lease agreement as financial lease, which is not a criteria. Option what is a financial lease? The ownership is transferred. Option to buy the asset. Okay, lease rental cover substantial period of the lease. It's of specialized nature which can be used without what? Major modification. The property which is not a criteria. Option?
Expected to have an audit. Lessor will not have.
Underlying asset expected to have an alternative use of the asset. No. நம்ம ஒரு கண்டிஷன்லேயே பார்த்தோம். The asset has no alternative uses. Which of the following statement is not true for long-term operating lease? Not an operating lease கேட்டிருக்கோம். Not true for a long-term operating lease. Wait பண்ணுங்க. If you rent a building for a short period, will you show the asset in balance sheet? No. If you rent an asset or lease an asset for a longer period, will you show the asset in balance sheet? Yes. I take a lease for the long term financial lease, both asset as well as liability will be recognized. Okay. Off balance sheet now, the asset will not be recorded in balance sheet now. For example, this building I rented for 11 months. Will I show this asset in the balance sheet? No. This is like a financial lease. Will I show the asset in balance sheet? No. Off balance sheet means that asset will not be shown in the balance sheet. Simple. Long-term financial lease, all are shown within the balance sheet. All are shown within what? Balance sheet. Next one. Three months agreement rent for a machine to complete a special order. The machine will be delivered on 1st August. Rental will be due on the first day of each rental month, assuming the lessee has made an accounting policy to election of not recognizing lease assets and lease liability, short-term assets கொடுத்திருக்காங்க. Effect of the event on 31st July. Effect of the event on what date? 31st July in financial statement கேட்டிருக்காங்க. We are on June 15, 31st July. அப்போ did we get an asset? Whether we have to pay any rent? No. August 1st rent pay பண்ணவே ஸ்டார்ட் பண்ண போறோம். So there will be no change in asset or liability or income because asset is yet to be delivered, nothing has come, which will be taken as financial lease. Major partly the cover ஆயிடுது, firstly the cover ஆயிடுது, cover ஆயிடுது.
Criteria அஞ்சு தானே இருக்கு.
அதுல 3 criteria தான் கொடுத்திருக்காங்க. Lease B is not coming in any of the criteria. Lease B is not coming any of the criteria. So that will be an operating lease. That will be like which one? Operating lease. Lease A financial lease vandrum. C also financial lease. Okay, it is covering in any one of the feature that will become financial lease, which will not be an operating lease. Question is which one will be taken as financial lease now? A, C, D. A, C and which one? D.
IFRS rental classification. There is no.
Yes. Okay. This one we have done in the holding and subsidiary company account panel, that we have done in the previous session. You can go through that. Other solutions I will share with you. You can go through that. For example, 1 lakh common stock with a par value of how much? 5. Okay, the company recently declared what? 5% stock dividend. When the stock dividend was declared, the company stock was trading at 25 கொடுத்திருக்கா. On the declaration of dividend, what will happen? Retained earnings will increase, no? When you declare a stock dividend, pay பண்ண போறோம். Payable to shareholders, obligation will create. From which one? Total shareholders equity will decrease. Because when we create a liability, total shareholders liability will what? Decrease. APIC வந்து change ஆகாது. Retained earnings decrease ஆகும், increase ஆகாது. Outstanding shares will increase ஆகும், decrease ஆகாது. Total shareholders equity will decrease because your retained earnings will decrease. From retained earnings only you are going to give the dividend, it will decrease on the month. Which is least likely to affect the value of the firm. Which will not affect the value of the firm. Distribution of stock dividend to shareholders. Why? There is no money going in, coming out. Capital structure is not increasing in the market. Which of the following dividends do not reduce equity in a corporation? Cash dividend will reduce. Property dividends also, liquidating dividends also. Stock dividends will not reduce. Because retained earnings reduce and share capital added. Which of the following are true with respect to small stock dividends? Which are true with respect to small stock dividends? See, retained earnings equal to the par value of shares issued will be converted into what? Capital. It will be recorded at par value. Extracts of financial statement of the company is given to us. Cash accounts receivable. Board of directors meet on October 4th. They declared a dividend of 7,50,000. The dividend is payable on October 25. Okay. Record date is October 12. Assume that this is only transaction affecting the October. The dividends are declared as being 10% stock dividend instead of cash dividend. What would have been the liability? Read the question. Declared a cash dividend amounting to how much? 7,50,000. Declared a cash dividend. It is payable on October 25th. Those who are holding shares on October 12th. What is the answer?
The amount can be changed on offer.
See, if dividend declared by the corporation has been stock dividend, okay, current liability will be when you pay stock dividend, whether we have to pay cash? No, we need not pay cash. So it will not be what? The current liability will remain unchanged. Current liability will remain what? Unchanged. Then stock கொடுக்கும்போது it will be decreased by dividend distribution, unchanged by the dividend declaration, but decreased by what? Dividend distribution. Same question. Stock dividend instead of cash dividend. What will be the shareholders' equity?
Unchanged.
Yeah. When dividend is declared, what is the entry you pass? Retained earnings account data or to retained earnings account data or to which one? Stock. retained earnings accounted out to stock dividend instead of cash dividend. Equity would have been decreased by dividend declaration and increased by what? Dividend distribution. Because out of retained earnings, the money is set aside, it will go down. So when the dividend is distributed, again it will become what? Equity. 5% stock dividend, what will happen to the additional paid up capital? Think about it. What is the correct one? Think about it. 5% stock dividend of a company additional company's additional paid up capital in retained earnings when declared கொடுத்திருக்காங்க. Declare பண்ணும்போது என்னன்னு கேட்டிருக்காங்க. Definitely retained earnings will decrease. A publicly traded corporation prepares financial statement using US GAAP கொடுத்திருக்காங்க. 5% stock dividend for 1 lakh shares கொடுத்திருக்காங்க. The current market price is what? 18 கொடுத்திருக்காங்க. The company's retained earnings are 26,50,000. What is the impact on retained earnings? How much decrease? $10 lakh into 5%. 50,000. So what is the answer? 10 lakh into how much percentage? 5%, 50,000. Next. We declared a quarterly cash dividend of how much? 8 lakhs. Dividend was paid on May 28. This is only transaction. When dividend transaction and closing entries have been made, the total equity will be
dividend.
Unchanged by what? Dividend payment. While declaring the dividend, retained earnings are counted out to dividend payable. Then we pay dividend payable to cash. 7% stock dividend. Fair value of 6 கொடுத்திருக்காங்க. The stock dividend was distributed 90 days after declaration. Current liabilities will increase because of the stock dividend declaration. What will be the impact on current liabilities? Think. It will be 10,000 into 3 into 7%. How much? 2,100. By what amount? The dividend was distributed after 90 days. When the stock dividend is declared, by what amount the current liability will increase in 10,000 into 3 into 7%. How much it will be? 2,100. Outstanding the number of shares into paid up value. 10,000 shares into paid up value, we call it as what? Par value of shares. So 30,000 into 7%, 2,000. On May 38, the company announced directors had made on May 26 declared a dividend of 25% per share payable to the shareholders on June 20 with the payment to be made on July 15. Date on which declared dividend becomes a liability for the companies when they declared. When they met on May 26, they declared a dividend. So this is the date on which dividend has been declared. Answer is what? May 26. They announced which was declared on what? May 26. That is May 26. So I'll share the answers for the remaining answers. Section A the maximum. Common stock, retained earnings, everything is covered. Yesterday we have done about asset side, investment, inventory, debt securities, fixed asset depreciation, those things. You could have right retain recognition of revenue also we had seen in the last class. So I'll share the answers for this. I request you to go through. Around 150 questions. Now, நேத்து பார்த்துக்கு ஒரு 150 questions பண்ணிருக்கோம். Today these questions I request you to go through. Now I'll share the answers also.